There are 4 big write-offs that you lose when you choose to have your LLC taxed as an S Corp unless you use the AP tax strategy. The first deduction that you are going to lose is something called the home office tax deduction. So if you're using a portion of your home only for business, but you also use another portion where you sleep, do personal things, you are no longer allowed to take this deduction when you're an S Corp unless you use the AP tax strategy. The second deduction that you're going to lose is something called the phone deduction. So if you're using your phone to maybe call clients, but then afterwards you're also using it to call your baby mama, your baby daddy, or call whoever, asking, hey, what's for dinner? You're no longer allowed to write off your phone unless you use the AP tax strategy.
And there's nothing that you can say about it.
The second deduction that you're going to lose is Wi-Fi and internet. So if you're using your Wi-Fi, your internet for business reasons, but then after you clock out, you're also using the things for like watching Netflix or catching up on football, you're no longer allowed to write off your Wi-Fi unless you use the AP tax strategy. Fourth and final deduction that you lose is the vehicle deduction. So you can't write off your miles, or you know how everyone's like, oh my God, if you purchase a vehicle over 6,000 pounds, you can write all off on your taxes. That no longer applies to you as well, especially if you're using the vehicle for business purposes, then you're turning around and going to the liquor store and turn it up and do whatever you want to do. You're no longer allowed this deduction unless you use the AP tax strategy. Now, I don't know if you caught on, but all those expenses that I just mentioned fall into this third category of write-offs called mixed use. Anytime that you have an expense that is used for both personal reasons and business reasons in your S Corp, you have to use the accountable plan tax strategy. An accountable plan is a written policy that allows an employer, your S Corp, to reimburse employees, yourself, on a non-taxable basis when certain requirements are met. So let's say this is you, and you incurred all these expenses for your rent, phone, Wi-Fi, miles, and then you're sending them to your S Corp in a reasonable amount of time. Your S Corp then reviews it and reimburses you for that amount that you paid. The cool thing about this is that the S Corp gets the deduction on the tax return, and then the money that you receive from your S Corp is non-taxable income to you. Now keep in mind, guys, this is just a video that you're watching on social media. If you're looking for professional tax help to help with an accountable plan, your business, your S Corp, or your bookkeeping, head to link in my bio to become a client. My name is Duke, and I make taxes very easy to understand. Give me a follow to stay educated.